Hello, welcome for the first time or welcome back. Another update for the portfolio. It's been a couple of weeks. It's been really choppy lately. It's been a horrible week for the S&P 500, which I measure to gauge the entire market. Let's just dive right into it. I'm going to bring the portfolio manager over. I'll quickly go over what happened over the last couple of weeks. Um, since the 20th, I believe. We'll go forward from there. So April 20th, I took a limit profit on Facebook short. That was a $42. April 21st, I opened a Playboy long position. It's a long-term hold. I know it's been sliding down, but I do like the fundamentals on it. I do like the company for the fact that they are going to sell. It's going to be a major clothing brand. They've bought up a bunch of stuff. They've had a bunch of spending to do over the last year, but they are now starting to turn profitable with their business, and this is what's going to be exciting with the earnings coming up on the 12th of May. I believe those are going to be positive earnings this time. Their base is set up. They're good to go. I think they're just about to start making money. If it doesn't happen this quarter, I'm still holding on to it for next. I bought it about $10, and the recent price on that is $8.84. So yeah, I did lose 11.7% on that one. Like I said, it's a long-term hold. I'm not getting rid of it. I got it at a good price, and I could have gotten better, obviously, but it doesn't matter. I'm holding on to it now. I did get rid of the Cushman Wakefield, which was a long real estate. I mean, real estate does do well in times like this, but Cushman hasn't done so well, obviously. And I said I was going to get rid of it at about 20% loss, and that's exactly what I did. I liquidated that at 20% loss, but we'll get to that. It's there. Um, okay, so took a limit profit on the Qs and shorted the XRT short, which is the retail sector. On the 25th, I took a limit profit on IWN short and the WRBY short, and I opened a Netflix short and a Roku short positions. This is where I took a limit profit of Tesla short on the 26th, closed Cushman Wakefield with a 20% loss, like I said, also on the 26th, open Beyond Meat and Coin shorts. On the 27th, took a limit on Netflix short, closed the silver long with a 60% loss. Silver started dropping down. I just got rid of it. Pvj long trade, that's the food sector. Open Microsoft short, closed bin short with a 20% $200 loss due to McDonald's contract rally. Now, what happened with Beyond Meat, the bin, BYND? Microsoft has announced, sorry, McDonald's has announced that they are going to be holding on to their product. They're going to keep it as a permanent thing on their menu, and there was that rally. I had my stop set up and it got triggered. Took a $200 loss. Whoop-de-doo. The price actually returned back down afterwards, but it was already too late. It doesn't matter. Better safe than sorry. I'm not going to sit on the short side if there's a rally, bull rally, and there was. Got rid of it. Moving on the 28th, I opened another Facebook short yet again. It was in the top of the range, so I might as well take another one. And on the 29th, I took a limit profit on XLK, closed Platinum long with a $54 loss. I've had that open for a while. Platinum's not doing so well. The commodities like gold and silver haven't been doing well either. So I'm holding on to gold, but I got rid of Platinum. And I took a limit profit on XLY short. So that brought me to $21.40. What's closed. And then currently my broker's bogus equities value. Why do I call it that? Because these don't really reflect the actual amount in my bank account or on my account. These vary up and down. I believe they don't have a certain set of rules like how to. It just keeps changing. It's not always accurate, and then they'll correct it the next day, and it's going to be accurate, and then the day after that, it's not going to be accurate. I write them down anyways, and this is what reflects that here. But let's look at what's the returns on the S&P 500 since January 12th, and that's minus 12.69%. and I'm doing -3.5. So I'm doing better than the market itself. The market's losing. It's like I said, it's been choppy. The volatility's been above 30 a couple of times, and I'm okay. It's I got burnt a couple of times. Like I said, with the $200 loss with the Beyond Meat, and that's the bulk of it essentially. But it doesn't bother me. It doesn't bother me. I'm up since the last time we spoke. I'm only on. I think I was at -6% last time. Currently, I'm at -3.56, which is, I don't know, somewhere between 2 to 3% increase over the last 2 weeks, which is great. What I'm looking for is a 24 to 30% annually, and that's pretty much what it's given me, right? So it actually looks like it's going to be a little bit better. So let's dive right into it. That's the update for where the portfolio is at. What you see in front of you is exactly what I have in my book right now, currently, and that will be changing before the next video, but this is exactly what it is. Everything is hedged except for one of these. So either I believe Playboy is not shorted. It doesn't have a short. So I bought this at $10 right about here, and it's continuing its slide. I'm hoping for a nice reversal and to make some good money with that. But whatever happens. I will be holding on to that long term. When it IPO'd around $6. So if it goes anywhere, it's probably going to bounce off the $6 mark. But back to the VIX, above 30. Very, very important that you're not long everything right now. Whoever is long the whole portfolio is going to suffer through this majorly. They're gonna incur some major losses. And enough said about that. Today's change was 11.5%. Month's change is 70%. But these don't really matter on the VIX. As long as you're above 30, that's danger zone. Anywhere between 30 and 25, what I call it, is the chop zone. And then anything below 25 and lower, that's the investing. So you want to hold on to something long term and preferably long. S&P, continuing its declines. Since the highs of last November, December, we have lost 14%. Once again, the bear market, confirmed bear market, is at 37.25 based on these numbers. So this week's change on the S&P is 3.8. During the month, it's lost over 9%. Like I'm saying, it lost 3.6% in a day. This is how much I'm losing since January. So bad things are coming to the market, especially with the negative GDP and the S&P being down. I am predicting that everything is going to keep on sliding at least until the next quarter, until things start improving and the Fed starts easing. They're tightening into a slowing economy, which is not good. Let's look at our yields. This one's got so much data, it takes a little bit to load. Yeah, this is last updated on April 29th, which is yesterday. And this is where we're at. The yield itself, the yield curve, it seems like it's going to invert again. Last time we inverted was early April, and that was just a couple of days. Anything longer than that signifies a deep recession or a depression. That's exactly what I'm seeing. There's no good things coming. All the indicators are showing me that everything is slowing down and the Fed is raising the rates into it, which is crazy. But whatever. USD Canadian. Somebody just showed up. Just bear with me for a moment. USD Canadian. US dollar is rising. Canadian dollar obviously is falling in regards to the US. So that's good. I'm holding everything in my US dollar, which is nice. It kind of grows it on the Canadian side, which is great. Our gold, around $1,900 mark. The silver, like I said, was dropping, so I did get rid of it. Copper, all the commodities, except for oil, which seems to be inching up again, and it's currently at $104. Our first positions, gold versus Coinbase. Enough said here. If you want to pause here and just take a look at what's going on, I opened gold in February. I opened the Coinbase just a few days ago, and I'm currently at a 14% return. This would be something nice to add on to, except in the 30 an up range. As I said earlier in one of the videos, if you've been following for a little while, I do not use this. This is good for investing. Right now, because things are so choppy and so unpredictable, you want to use ranges. So you want to be in and out quickly and just move on. This is actually no longer Invesco. This is something else. This is Coinbase. And I'm shorting Coinbase because that's a company that's way overvalued. It's trading at many times over its earnings, and it's got to readjust. It's not doing well. Pvj Roku. I opened the Roku. This is no longer Cushman Wakefield. I'll get rid of that. This is technology, obviously. Anyways, we are positive on it. Like I said, I have a long and I have a short. Always you hedging out the risk of being long only. So even though my longs are taking some losses right now, my shorts are offsetting that, and I'm still in a profit. You know, like this is why you hedge, so you're not affected by the market spikes up and down and all these different rallies in different ways. You're going to be seeing smaller profits, which are much more profitable in the long term, and they're a lot safer. This is my spread, is what's going on, or the range. The ratio. You can call it ratio. You can call it spread, whatever you, if you will. But one thing I have to add to this, I will be playing with some options again. Last time I did, volatility wasn't there. Right now where volatility is back up again above 30. I will be opening some options positions because you can make some really good money really quickly that way. And I won't be going with half of the portfolio like I did before. I'll just slowly ease my way into it, maybe one or two. Just an FYI, we're going to start using this section right here, which I use for option trading. This is for investing, and anything range bound where you have a point loss and you have a stop loss, everything is predefined. That's anything above 30%. You want to, if you're outright buying the stock, that's what you want to do right now. You just want to stay within the ranges because who knows what's going to happen tomorrow. Venom Facebook. Venom had an adjustment over the last week down, but that doesn't scare me at all. I opened a Facebook short. Currently, the trade is at minus 25 bucks. But this is my second Facebook short already. I've had this open since February. This is my second. I've had this open for a couple of days, and it's returned some money to me once. It seems to be making profits right now again, and it's becoming one of my favorite shorts. Meta, whatever. Some people don't call it Facebook anymore. Thales Corporation. I was up. I'm down. Why am I long Thales? Well, telecommunication does well in times like these, and I'll stay long it until it reaches the top of the range, which I believe is at 30. I'll take my profit there, and then at the bottom of the range, I'll pick it up again. Microsoft. I'm currently at 36.45. It's doing well. This trade is working out. That's the price action right here. This is actually not returning the S&P 500 for some reason, but it doesn't matter. Why aren't we returning it? That's strange, actually. Oh, okay, here we go. Sometimes the dates don't match what's on the left side. So that's... Just quickly got to adjust a few things in my spreadsheet here, and you'll see the S&P 500. So Microsoft just follows the S&P 500. You can see the correlation there is pretty high. And since I'm expecting the S&P 500 to go down, I'm expecting the Microsoft to go down. Like I said in my previous videos, technology sector doesn't do so well in times like these. We're defensive, and technology does not do well in defensive times. Playboy on a downward slide. You know, they've changed their motto. They sold out to a different company. They are now a clothing brand, which is you know, they had to start somewhere. They had to expand. They had to open up a bunch of new locations, come up with new products. Research and development costs a lot of money, so they've been not profitable for a while, but they've been spending like crazy lately. setting up their base of the business, and I believe moving forward from here, it's going to be actually very, very profitable. They're following the same motto as Adidas and Nike, which are very, very profitable and very successful companies. And if they continue on the same trajectory, on the same path, I see good things for this company. So I'm long that. And I got 90 shares of it at $10, which is great. And that pretty much brings us to the end. Currently, the portfolio 17,413. We're up about 2 to 3% since the last video. Doing well, considering what's going on with the rest of the markets and everything. Like we're almost at minus 13% since January there. And the S&P, like I said earlier, is down quite a bit. It's down almost 14% since the last high. Right about this mark, minus 20% is where the bear market gets confirmed. FYI, one more time. And one more look at the yield curve. It looks like we'll be inverting again, which confirms more that, yes, hard times ahead. And that is it for the video. Thank you very much for joining me again, sticking around through this boring video. Maybe on the next one, we'll go through some of the processes again, setting up and looking for the trades. Make sure you subscribe to the channel. There's a lot of information to be had over here. Like pretty much what I've been doing right now is I've been doing something to convince you that what I'm doing is the right way to go. And the right way to go is to hedge everything that you have. You hedge your portfolio against any market fluctuations like we've been experiencing lately. If you are long only right now, you are in the pain bucket. Let's just call it that. It's horrible times ahead. Okay, so you should either get out or start shorting something. All right, but you gotta pick those shorts right, and you gotta pick your longs right. You gotta take a long defensive, short cyclicals, and go from there. And like I said, coming up, we will be going through picking some of the stocks. Probably the next videos, I'll come up with a pair just out of nowhere. We'll just go on the internet and we'll find some companies to buy, and we'll buy a company to short, or we'll find a company to short, not buy it. All right, thank you very much, and we'll see you on the next one.